Let's go back to those US retail sales numbers that we saw. Are we past peak growth? US retail sales missing the mark, weak data out of China. What's your sense as we move, of course, into the back end of 2021?
Yeah, I think we could well be past peak growth, as you say. You mentioned retail sales there at the top of your show. We also had disappointing consumer sentiment at the end of last week, and it looks as though inflation is plateauing if you take the CPI last week as well. But we don't necessarily think this means it's anything bad for stocks or for bonds, particularly long duration bonds. I mean, weaker growth and inflation is good for fixed income. And in terms of stocks, on paper, lower growth is not necessarily good for stocks. But what it probably means is that policymakers end up kicking the can down the road in terms of some of the tightening that they're going to do, in whether it be tapering or rate hikes. So if policymakers delay, that's always good for stock markets.
When do you see yields starting to tick up a little bit more than they are? Right now, we're just showing you the 10-year back at 127, but of course, off of recent highs. There's starting to be a lot of talk about tapering coming out of the Federal Reserve, perhaps as early as the end of September or October. When do you expect to see yields start to pick up?
We think they might pick up a little bit, but actually we're in the camp that we see them finishing the year lower than where they are right now, even though they've retraced a lot of the move higher they made. I think they hit a high of 174. They're now back down considerably. But we just think that because you've mentioned there that growth is peaking, that inflation is peaking, that investors are going to come round to the fact that this is not just short covering by bond investors, is actually in the investor community getting around to the fact that the market is, the economy is not as rosy as it should be. So we think yields can come lower from here. And as for tapering, I mean, tapering, we've all talked about it. It's a kind of known event that's going to happen. So I think when it's finally announced in the second half of this year, we don't think the bond market is going to sell off. The taper tantrum happened in Q1 when yields rose 90 basis points. So if any investors are waiting on the sideline for the taper tantrum, they've missed the bus. It's already happened. So that's why in our camp, we feel that yields can actually grind a little bit lower towards year end from here.